Have you ever watched some people online say they made money while they slept? And you thought, how is that even possible? Maybe you're saying to yourself right now, investing is for the rich. I don't have that kind of money. Trust me, it's very simple to invest. But here is the truth. You don't have to be rich to start investing. You just need to understand how it works and take small, little, consistent step at a time. Welcome to Nini Nancy, where we make money talk simple, smart, and faith driven. If you are ready to stop watching others win and start building your own wealth, you are in the right place. Because today we are breaking down investing for beginners. And I will be talking about stock, bonds, and mutual fund in a way that is fun, clear, and practical. Let's start simple. What does investing actually mean? Investing is putting your money to work so it grows over time. That's like letting your dollars become tiny employees that goes out, earn more dollars, and bring it back to you. Do you realize that investing is way better than saving? Because savings is keeping your money safe in the bank, while investment helps multiply your money. Here's the secret: time is your best friend. The earlier you start, the more money you can grow through something called compound interest. This is where your money earns interest, and that interest it earns even more interest for you. It keeps rolling in like a snowball. It just keeps rolling in. If I show you today how to turn $100 into $1,000, will you will you give it a try? Comment below. Let's start with stock, the most popular type of investment. When you buy a stock, you are buying ownership, a piece of a company. If that company does well, your piece becomes more valuable. For example, imagine you bought $1 share of Apple years ago for $20. Today, that same share could be worth over $150. That's what happens when you own a part of a growing business. Another example, if that company pays out a portion of its profit called dividend, you can even earn income while holding your stock back. So you're not just saving, you are partnering with success. You become a partner with them. But remember, stock can rise and fall. It's like a roller coaster. You might see ups and downs as a beginner in short terms, but in the long term, history shows the stock market always trends upward. That's why patience beats panic when it comes to investing. Investing isn't gambling. It's believing in the growth of that company and in the economy itself. Next is bond. Think of them as the reliable, stable friend in your portfolio. When you buy a bond, you are lending your money to a government or a company. In returns, they promise to pay you back interest with interest. It's like you're becoming the bank. For example, let's say you buy $1,000 government bond that pays 5% yearly. That means you will earn $50 every year. And at the end of the bond term, you will get your full $1,000 back. No drama, no promises. Bonds are safer than stock, but they also grow slower. That's why many investors use a mix: stock for growth, bond for stability. If you have a choice right now, would you go for the faster growth or steady income? Tell me below. I am curious, which side are you on? Furthermore, bond also protect you when the stock market drops. So when stocks are falling, bonds often hold steady or sometimes even rises. They balance your portfolio like faith balances fear, calm, steady, and strong. Here is the sweet one for me. Now, if the stock market feels too confusing and the bond feels too slow too, there is a perfect middle ground: mutual funds. A mutual fund is like a big basket that holds many investments: stock, bonds, or both. You and other investors put your monies into a basket, and the professional manager decides how to invest it. Take, for example, if you invest in a mutual fund that includes Apple, Google, Microsoft, and one of these companies struggles, the other helps balance your returns. That's called diversification, spreading your risk. You get me? Mutual funds are great for beginners because you don't need to pick individual stock yourself. You just invest and let the professional handles the rest. Some funds are also called index funds, which simply tracks the overall market, like the S&P 500. These are low cost, easy to start with, and have made millions of investors wealthy over time. Proverbs 21:5 says, "The plan of a diligent leads surely to abundance, but everyone who is hasty comes to poverty." So don't rush, don't panic, just plant your seed and water them with patience, wisdom, and consistency. Your seed will grow. Once again, this is Nini Nancy, reminding you you don't have to be rich to start, but you have to start to be rich. Keep believing, keep learning. I will see you in the next video. Have a great one.